This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And as you can see by the tie, it is USDA day. We got kind of a lackluster report, nothing to write home about, but prices are acting a little bit out of the ordinary. We're rallying on a not so friendly report, which is always good to see when you can't see the market break down on bearish news. That is a little bit of a bullish indicator. But looking at the technical side of things, what we really want to see, consecutive closes out above 363 3/4. This is previous lows, so previous support now becomes resistance. If we can achieve closes above here to round out the week, I wouldn't be surprised to see this market continue to rally a little bit closer towards that 380 level. Now, as far as the soybeans are concerned, same type of deal. We got to move out above 880 to 883. This was a resistance and marks higher highs now that we're out above here, which opens the door for a run at psychologically and technically significant $9 handle. A lot of news circulating here this week with regards to kicking the tariffs down the road a little bit, extending that towards October 15th. Outside of that, I think the big news that is really getting swept under the radar here a little bit is the fact that John Bolton is out, and he was a big hawk and I think a big headwind for trade negotiations with China. The fact that he's out makes upcoming meetings, which seem inevitable, a little bit more promising, not necessarily in the sense that we're going to get a deal done right away, but it opens the door for the administration to take positive steps in getting a deal done before the election. So keep an eye on that. Those upcoming meetings will probably have a little bit more weight behind them with Bolton out. Now, wrapping things up with the wheat market, wheat fairly constructive here. I think we're in a bottoming process, specifically for that Kansas City contract, as we're starting to see money flow shift a little bit in the ag commodity sector in general. December contract, $4, psychologically significant. Consecutive closes out above here as a pivot point. I wouldn't be surprised to see prices rally a little bit closer towards 430 over the intermediate term. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.